I happen to think it'll get pretty serious. They're ultimately going to have to decide, do we save the currency or do we save the bond market and the banking system? It's true today in Japan, in the UK, in Europe, in Turkey, and many other places around the world. This does not mean things are good in the United States. I just think it means that they are better in the United States than they are overseas.
Historically, have these types of crises resulted in political change globally?
Yes. Sides are being chosen. Rather than the world coming together, the world's kind of moving apart. You know, the dollar, if used correctly, is probably the biggest weapon we have, perhaps even greater than a nuclear bomb.
Good evening. Welcome to NTD's Fresh Look America. I'm Paul Greaney. The dollar milkshake theory made Brent Johnson famous in 2018. He predicted a global currency crisis, but said that the US dollar, before it faced its own crisis, would rise significantly against other world currencies. It wasn't a popular opinion at the time, but it looks like that is exactly what is happening. Since 2018, the dollar is up 15% on the British pound, 15% on the euro, and 27% on the Japanese yen. Johnson says that the demand for dollars globally is huge. It is the world's reserve currency. People need it for international trade, and also many outside the US have taken out dollar loans, and the interest payments alone on that debt is huge. This is one reason why the US government has been able to print so much new money recently without the dollar weakening versus other currencies. For background on the dollar milkshake theory, you can watch our previous interview with Johnson. That was at last year's New Orleans Investment Conference. But today we'll focus on what a currency crisis would mean for America's position as the world's most powerful country. So Brent Johnson, thank you. It's great to speak with you.
Thanks for having me back. Good to talk to you.
So Brent, you're predicting a global currency crisis. How serious will it get, and how will it affect regular Americans?
Well, yeah, how bad will it get? That's a very good question. I happen to think it'll get pretty serious. That doesn't mean it's going to happen tomorrow. I actually think, something as big as a currency crisis will typically take longer to fully play out than many others. And part of the reason I think that is once you get a currency in trouble or government bonds in trouble, you typically get reactions from monetary authorities, governments, central banks to try to quell the problem. And so I think they will probably do whatever they can to kind of kick this down the road. But I think we've kind of gotten to the point where they can no longer kick it too far. And so I do think that we will have a serious crisis.
Are you expecting something akin to the financial crisis? Can you make some comparison there?
Yeah, I think it's more akin to the currency crisis that we had, the Asian currency crisis in the late 90s, or the number of currency crises that Argentina's gone through. What's happening, I think there's a lot of people perhaps in the U.S. who understand that the U.S. has borrowed too much money. We've run a budget deficit. We run a trade deficit. We've borrowed a lot of money at very low interest rates. We're never going to be able to pay it back. They're going to have to inflate the debt away. All of these arguments for how the U.S. has been too profligate, and at some point we're going to have to pay the price. And I do think that there's truth in those arguments. But what I think a lot of people miss is that while that may someday be true for the United States, it's true today in Japan, in the UK, in Europe, in Turkey, and many other places around the world. So while it may be true for the U.S. someday, it's already true for others today. And as a result, that's why you've seen the dollar rising so aggressively versus these other currencies. And so, the governments and the monetary authorities of these other countries, whether it's the UK, whether it's Japan, whether it's Sri Lanka, they're ultimately going to have to decide, do we save the currency or do we save the bond market and the banking system? History shows that governments try to protect both, but they ultimately have to choose one, and they choose to save the bond market and the banking system. And as a result, the currency falls a lot. And when the currency falls, that's when you get the currency crisis.
So can you take some of these areas that we're seeing crises in at the moment and perhaps what we could expect to see in the United States if things play out in a similar way?
Well, I think what you have to remember, if I give you an example, both Japan and Europe and the UK They have borrowed a lot of money over the last 10 years, whether it's for bailouts, stimulus programs, however you want to define that. A lot of that was done at either very low interest rates or negative interest rates. Now, with inflationary pressures as a result of the COVID policies and the shutdowns and deglobalization and the lack of supply, we're getting inflationary pressures, which the world has not had to deal with on a great scale for a very long time. Those inflationary pressures makes it harder to use the tools that were used in the global financial crisis to combat a global slowdown. So now we have a global slowdown and inflationary pressures. If they were to use the same policies they used coming out of the global financial crisis, it would exacerbate the inflationary pressures as opposed to fight them.
So you're saying these central banks in the past and up until now have used inflationary measures to combat crises, similar crises, but now we're seeing across the world, record high inflation. You're saying it's not as easy. Is it impossible for them to use these? They risk, if I'm not mistaken, on one hand, exacerbating the inflation, or on the other hand, financial crisis.
That's right. And if they do use these policies to combat the deflationary pressures and do exacerbate the inflationary pressures, then they're going to have a social crisis on their hand, because the citizens are not just going to sit there and accept record high inflation and a decreasing standard of living. If you look back, I don't want to sound too overly dramatic, but if you look back at every revolution in history, it happened when people were out of work and they were hungry and they were cold. Well, right now we've got high inflation. Their jobs are not as secure, and food prices are rising. And energy prices are rising. So they're cold. They have the potential to be very cold this winter. They have the potential to be hungry, and they have the potential to be very upset. And so I think, history shows that governments typically use financial repression to get out of an over-indebted situation. What that means is they let inflation run hot and inflate the debt away. It works really, really well on a spreadsheet. You hold rates low, you let inflation go high, you let inflation run at 5 or 6% for 10 years, and you've just inflated away 50% of the debt. Works fantastic on a spreadsheet. The problem is when you do that in the real world, that's when people walk out into the street with pitchforks, right? And politically, it's not easy for politicians and governments and central bankers to just let inflation run wild. It's much more difficult to do it in the real world than it is on the spreadsheet.
So you're saying that these policies have been, government deficits, rampant government spending has been happening for a long time. You're saying that governments have had ways to get around this through various techniques, financial techniques. But this time it's different. So on one hand, they can keep printing money, let inflation run hot, and risk people on the streets. To me as somebody sitting here, but imagining a leader, okay, let's fix that problem. Let's not let inflation run hot. Let's not have people on the streets. But what are they trying to protect exactly?
Well, they're trying to protect the status quo. They're trying to protect their jobs, and they're trying to protect the economy from collapsing or from a currency collapse. It kind of depends on which country we're talking about. But, Jay Powell, the head of the Federal Reserve, has been extremely criticized to an extreme level for letting inflation run too hot, right? And so now he's kind of, for lack of a better word, he's mad. He's mad. He's upset that inflation got so high. And so now he's trying his best to bring inflation down. He's trying to bring inflation down by crushing demand. And I think he will be more successful in that than people think he will be. If he wants to crush inflation, he can do it, but he'll have to crush the economy to do so. He literally said at the last meeting, we need to have a recession that's going to bring pain. It may mean people having to lose their jobs, and it may mean people having to get paid less. Now, that's not a very popular thing to say, but he said, I believe that is a lesser evil than letting inflation continue to run away to the upside. So here's the point. Neither solution is good. These central bankers and these monetary authorities have backed themselves into a corner, and there's really no good solution out. And again, it goes to my point. You either save the bond market or you save the currency. And I think we're going to see a progression of dominoes where countries get put in this position of having to save the currency or save the bond market. I think they will initially try to save both. They will ultimately have to choose to save the bond market and the banking system, which means the currencies will fall. And then I think we get into a progression of the dominoes. Ultimately, it will hit the United States, but I think that's much further down the road, and I think it happens all over the world before it happens here. And again, this does not mean things are good in the United States. I just think it means that they are better in the United States than they are in overseas.
So why do you think authorities will choose to save the bond market over the currency and allow this currency crisis to happen? What leads you to think this?
Well, because history tells me that's what happens. From a government perspective, you would much rather have inflate away the debt than to have a collapse. I think the interesting thing that if you talk to anybody in Germany, they have somebody in their family who lived through the Weimar inflation. And so the biggest fear that they have is the money losing value. If you talk to any American, they have somebody who lived in their family who lived through the Great Depression. In the Great Depression, money had incredible value because there were no jobs, there was no money. So the little money there was had great value. And so, in America, we have always fought against deflation. In Europe or in Germany, they for 100 years have fought against inflation. And it both lead to ruin. Both are horrible, but they're just different sides of the same coin.
Historically, have these types of crises resulted in significant monetary change or even political change globally?
Yes. In a short answer, yes. Not necessarily. There's typically some kind of a change. It doesn't necessarily mean there's a regime change, although it certainly could lead to regime change. If you think about it, it depends on how bad it gets. But once a currency loses value, it basically means there's no more trust in the government. Trust is lost. It's hard for a government or a regime to last if there's no longer trust in it. And if for them to survive a situation where there's no longer trust in it, then the only way they survive is through force. And again, I don't necessarily want to predict these dire outcomes, but I would expect as currencies lose value around the world, you're going to see social pushback and you're going to see revolutions, for lack of a better word, right? And, some of these will be successful and some of them won't. But I think on a bigger stage, there's been this kind of popular meme over the last couple of years that the U.S. and the West has painted themselves into this corner. China and Russia are these long-term strategic geniuses who have done everything right. And they're playing chess while we're playing checkers. And I think that's kind of the wrong analogy. Number one, I don't think that they're playing chess and we're playing checkers. I don't think that they're that much smarter and better prepared than the West is. But I think the game I would more equate this to, this is the great game. This is the Game of Thrones. This isn't chess and checkers. This is for all the marbles. The U.S. is the global hegemon and has been for a long time. They want to keep that spot more than anything else. And more than anything else, Russia and China want to ascend to that spot. And they're sick and tired of the U.S. telling them what to do, and they're not going to play the game anymore. And so all of this is kind of coming to a head at the same time that we're having these financial challenges. And in fact, it's all related, right? The U.S. is using the dollar as a weapon. Putin is using, energy as a weapon. So we've got economic war, and we've got literally, kinetic war going on the borders of Europe. So, and many people think that the U.S. is bound to lose the global reserve currency status, and they will even make the argument that for economic reasons, it makes economic sense for the U.S. to give up the global reserve currency because while it's a great advantage, it's also a great burden. Well, I think that's true if you look at it through an economic lens, but anybody who really understands what a global reserve currency is, it's not an economic thing, it's a power thing. And nobody ever gives up power. The king very, very rarely abdicates the throne. I'm not saying it can't happen, but very rarely does it happen. And while I don't know everything, I'm pretty sure the U.S. is not just going to hand over the global reserve currency and being the global leader. And so anybody who wants to ascend to that place is going to have to knock them off. And I don't think that they will take that lightly. So,
Brent, can you explain what the U.S. has to lose in this potential global crisis?
Well, we have a lot to lose. We have a very high standard of living in the United States, right? There's certainly sectors of the population who do not have it great. Inequality is rising, but by and large, the U.S. has a very high standard of living. Despite the problems we have, people from all over the world still want to come to the United States. People flowing into the United States actually helps the United States because it helps increase demand for businesses, for products, for services. It helps growth, right? It helps economic growth. If what plays out leads to the U.S. losing that status as the safe place in the world or the global hegemon or having the world reserve currency, then potentially people stop wanting to come to the U.S. and they want to go somewhere else. So then we would lose that not only flow of capital that comes with it, but we would lose that flow of demographic growth. Once you're at the top, there's really only one way to go, and it's down, right? So it doesn't mean that we have to become, a third world country, but, nobody ever wants to take a step back. Everybody always wants to take a step forward. And once you get used to a certain level of living, it's very hard to go back to a lower level, even if that lower level is still pretty good. And so, we could see social unrest here in the U.S. I mean, we're already seeing it. We've seen it a lot over the last couple of years. I just think that, I don't like sounding like a negative person. I know when I talk about these things, it sounds very gloomy. I think ultimately we'll get through this. The sun will still rise. And in many ways, this great turnover or this great crisis is going to present a number of great opportunities as well. And I think for people who understand the dynamics that are happening and why they're happening, I think there's going to be opportunities to make money over the next couple of years. And while I think about things kind of on a moral level and a personal level, that's not my day job. My day job is to put my moral compass aside. It's to put, what I would like to see happen aside. And my job is to figure out what's going to happen and place capital in a way that will make money when that happens. And, while it will not necessarily be a fun 2 or 3 years, I think it's going to be a 2 or 3 years that's presented with many dangers, but many opportunities as well.
I want to ask you about those opportunities in 1 minute, Brett, but I want to ask you, because I think a lot of people are following the Fed now, even people who may never have heard about or cared about the Federal Reserve, pre-COVID, are following the Fed's meetings, what they're doing. And perhaps you can give us some perspective. How are the Fed's decisions today impacted by this great power struggle, global power struggle that you're talking about?
Well, I think there's a couple ways. Number one, I think the Fed is tasked with the domestic economy. The Fed is not tasked with the global economy. But as the global hegemon, and for those who are not familiar, I apologize, for anybody not familiar with this lingo, hegemon is it's a word that describes kind of the global leader. The dollar, if used correctly, is probably the biggest weapon we have, perhaps even a greater weapon than a nuclear bomb, because it's in many ways it's silent and it's misunderstood. I think a lot of people understand when you drop a nuclear bomb on something, it's going to blow it up. That's not too hard to understand. But not everybody understands the intricacies of the global economy and what a stronger dollar kind of does to it's almost like a stealth weapon, right? And so what I believe has happened is, I mentioned earlier, we're in this Triffin's dilemma. I think the Fed knows we're in Triffin's dilemma. And I think that they know that if they raise rates, while they're raising rates, they are raising rates on the U.S. domestic economy, but they're essentially raising rates on the whole world. And I think that they know that we can handle higher rates better than many other parts of the world. And because in the last couple of years, we've kind of led to this bifurcation of globalization. We've got East versus West. We've got Russia versus the United States. We've got China versus the United States. We've got Russia versus Europe. Sides are being chosen. Rather than the world coming together, the world's kind of moving apart. And I think each side is trying to shore up their team, for lack of a better way of saying it. And I think anybody that's on the margins, both Russia and China and the U.S. and West, they're in Europe, they're reaching out to these people that are on the margins and say, hey, come to our side, or hey, come to our side. And I think if you're trying to get somebody to your side who doesn't think they need to be on your side, if you put them in a position where now they need you, it's more likely to get them to agree with you. So if a country is fine, but then all of a sudden the dollar starts going higher and their funding costs start going higher and it's harder and they start having some, economic and social problems at home, now maybe they need help. Now the U.S. can go to them and say, hey, we're willing to help you out, but in exchange for our help, you're going to have to give us help versus Russia, versus China, on this UN Security Council vote, on this new trade agreement, whatever it is. In other words, help, but help with strings. And, I think that's kind of what's going on now. I've talked to a lot of people who completely disagree with me. They say that the Fed has nothing to do with that. Well, that may be true, but the Treasury is involved. Many people don't know this, but the Treasury Department actually sets dollar policy. And the Treasury wants a stronger dollar. And so if the Treasury wants the stronger dollar, the Fed has some leeway to help them out or not. But, if the Fed and if the Treasury in general says we want a stronger dollar, that means that they don't want the Fed doing huge amounts of QE and not raising rates, right? So I think that the dollar has, without question, been used as a weapon this year. Whether it's the sanctions being put on, Russia and some of its allies by removing them from the SWIFT system and the dollar payment system and the confiscation of assets, but then also I think raising rates and generally putting people in a economic stagnation or economic struggles. It allows the U.S. to kind of wield that sword that may not be obvious to most.
So you're saying that, okay, as the Fed raises rates, the dollar becomes stronger, these other currencies become weaker, but these other countries, they need U.S. dollars to finance their debt, to do trade, to do all sorts of things because the U.S. dollar is the reserve currency. So then the U.S. can go to them and say, hey, we can sort you out with some dollars. We can make it easier for you, but you have to sign on to this security pact. You have to cut off Russia, X, Y, Z. Is this what you're saying?
That's what I'm saying, yes. And I know a lot of people disagree with that, but, if it was me, that's what I would do. So I don't put it past them. Or I should say, I wouldn't prefer to do it. If I were tasked with a job that required to do it, that's how I would do it.
There you go. It is a democratic system, Brent. Maybe someday. Last question. You can take off your moral hat and we can speak a little bit about money. How are you planning to perhaps protect your wealth or, increase your wealth pre-crisis and during the crisis?
Well, I think as a very general statement, I favor investments in the United States and kind of North America versus the rest of the world until I see that we're kind of either most of the way or all the way through this crisis. I can't see a situation where the U.S. goes into an economic downturn and the rest of the world takes off and has global growth. I don't think that's possible. I think it's possible where we see the whole world go up together, in which case I'm fine being in the U.S. I can see a case where the whole world goes down together, in which case I'm no worse off being in the U.S. than being anywhere else. I can see a situation where the U.S. does okay and the rest of the world does very poorly, in which case I'm better off being in the U.S. Or it's possible that the U.S. does very poorly and the rest of the world does great. But that last option, I think, is such a low probability, I'm willing to overlook it and not allocate assets there. And so in the other three possibilities, I might as well be in the U.S. It provides the deepest markets, more liquidity, I believe less risk, and in many ways more opportunity, because I think as we get into a crisis, global capital will seek out the U.S. as a safe haven and push U.S. asset prices higher relative to the rest of the world. So I've always said I think everybody should own gold. It doesn't mean I think it's going to pay off right away, but I think if you own gold, if you can get through the crisis with gold in your portfolio, you will at least have an asset that you can start to rebuild with. Because gold, can't be inflated away. It can't collapse. It's durable. It's been around for 5,000 years. So for all the reasons that people understand gold, I think it's important to have it in their portfolio, just so you always have an asset once you get through the crisis.
Brent Johnson, we really appreciate it. Thank you, Brent. Till next time.
Thanks for having me.